Hi, my name is Paul Young. I'm just going to walk you through the basics of budgeting. It's an area that comes up quite a bit in discussions, both through blogs on different social media sites, as well as individual discussions with people that don't clearly understand how budgets are actually developed. I'm going to walk you through what a budget is. I'll walk you through how they're produced, and I'll provide some samples from both business, government, as well as households. So what is a budget? Well, it's a detailed plan of how you're going to achieve goals and the objective for the year. So it's basically has revenue and expenses. In the case of business, it's got net income. In the case of government, it's got basically a surplus or a deficit. That's basically how it does. In case of a household budget, it's basically your cash. What's your cash left over? And basically, it's a detailed document with assumptions in it that basically shows you how you're going to achieve those targets. And typically, it's about 1 year, but you could have a strategic plan which goes out to 2 to 3 years, but you'd never normally see it go beyond a couple years. Now, in government's case, how it basically works in a nutshell: cabinets, both provincial and federally, and then you have the municipal councils, set the priorities for that year in terms of what their goals will be. That then forms the basis in terms of the revenue and expense targets they're going to charge out. So if they're going to introduce new taxation policies, or make changes to payroll taxes, or change some payouts to different programs like CPP, old age security, transfers to the various governments, then those things will be set up as part of looking at the overall budget cycle. And they also will, part of that, come up with the first estimates. That kind of forms the basis of where they're going to go to the next fiscal cycle. And then what they do as part of through the overall budget cycle, they have meetings with the public, consultation they call it, to get input from the different groups what they'd like to see in the next budget. Now, that doesn't necessarily mean those inputs will be in the budget cycle, but it's something that they try to do. In business case, they actually get together with the stakeholders, from the general sales managers to the various departmental managers, and they give them their budgets, and they have to build up that budget based on the assumptions and the targets for those things. That's why you're seeing basically a different approach in budget cycles between government, where government has budget laws to approve it. In business, it's the board of directors approved it, and it's got more of a detailed plan that comes together in about 2 or 3 months. Where in case of government, the budget itself will actually come into play over a 12-month period before it's actually delivered into the various legislature, councils, or House of Commons. Household budget basically is based on cash flow. People usually sit down on an annual basis and go through their budget. There's types of budgeting. There's what we call zero base. Basically, you start from scratch, build up the budget. So you build up your expenses and revenue from scratch. There's the other way we call it, is you basically get your numbers and you base it on run rates, and then you make some adjustments by looking at what's coming in, what you plan to spend in particular area. Normally with a lot of companies, they will do is they'll focus on 80% of those costs, which are usually people, facilities, and vehicles. It's typically the cost of most businesses, and that's where they focus most of that, and probably utilities. This gives you an example of government. So what you're seeing here is the different revenue buckets. So income tax, corporate tax are based on rates. Goods and services are based on rates. Employment's based on rates. So if you're going to change corporate tax rates or payroll tax rates, then you're going to see changes on how that. And it's also based on growth. So if you're going to generate revenue, it's going to be based on GDP growth. Now you're going to pay out programs. So Canadian Health and Social Transfers, these are agreed upon transfer agreements between the provinces and the federal government. Those ones are already set up. The gas tax fund was already set up too, as well as a dedicated fund for transit. Now you're looking at basically dedicated funding. Okay, so if you make changes on how you're going to change those fundings, they become expenses. So how are you going to accommodate those expenses? Are you going to raise revenue on what you're going to do to offset that? And that's what part of the budget cycle it means, is you have to look at what we call as gap analysis. How do I bring my expenses and revenue to equal each other, or at least be in either a zero position or in a surplus position? This kind of shows you where the government projects it's going to be. They figure they're going to be in deficits for the next few years. So that's something to bear in mind as you're looking at the budget cycle. Now in business case, we look at the major buckets. We look at a revenue budget that determines your sales. Look at a capital, it's the capital expenditures like new buildings, equipment, facilities. Compensations, payroll. Operational expense now gets in your general min costs from rent, utilities. And that's what it basically is going to drive in that one. This gives you a sample of a business budget. So you're looking at the revenue side, cost of goods sold. Then you're looking at the operational expense side. That's what you see here. Household budgets now basically are based on income and then your expenses, and that's what you're seeing here. Now I just wanted to show you the average household budget here to kind of give you an idea in terms of where the buckets of money being spent, and this would be part of when you look at your allocation. Now let's talk about a couple assumptions here. Balanced budgets do not balance themselves. Despite what you hear from different people, you actually have to do hard work to actually get that budget to balance. The budget documents from municipal to provincial to federal all have a lot of assumptions built into them. They're detailed documents for that reason, to test the assumptions. Second thing is, a budget becomes law when it's approved by council, provincial legislatures, or the federal government. That's the key things where you're seeing a little bit difference in government. Now, if a government's got a majority government, then it's able to pass things through. Business budgets work differently. Typically, the entities roll up into a consolidated budget. That budget then either has to be approved by senior management or the board of directors, depending on the type of corporation it is. So there's a budget process there that goes through. What I wanted to illustrate here with this presentation briefly is to give you the fundamentals of budgeting, to understand that when budgets are discussed about, that they are detailed documents. They are a lot of assumptions into those documents. And they also tell you about when you're trying to make and set priorities, you have to really think things out and look at things, how you're going to manage the cost and revenue side of the business. And that's really what I wanted to drive out of this presentation. Thank you.